Welcome back to the program. We invite you to join the conversation on Twitter. We're at This Morning at Channels TV or at Harriet Agbenyi, or you can send your email to businessmorning@channelstv.com. Now, in the build-up to the elections, what is the mood of investors? The markets across board have been pressured by domestic and international forces. As we know it this morning, oil prices looking a little less gloomy than they've been looking like in the last couple of weeks, up about 6% to nearly $60 per barrel. Now, in the last couple of months, we've seen that foreign investors have dumped FGN bonds, causing yields to rise across board. The Naira has been in a tailspin, and market watchers expect this to continue until after the elections. Well, joining me to look at the elections and the markets is Tunji Andrews. He's the Managing Director of SBM Intelligence. Good morning, Tunji, and thank you so much for coming in.
Good morning for having me again.
It's, interesting times looking at the market. Now, let's start with the currencies market. How much dent has the election, done on the Naira?
Well, we'll see that right after the postponement of the last elections, the Naira went into panic mode, basically. We had, for the first time, it would be back-to-back circuit breakers on the interbank market, where we saw that trading was halted due to the fact that we crossed the boundaries of trading day. The elections have not been too well on the Naira, and that coincides with just around the time global crude oil prices seem to be falling. So all that was a huge pressure on the Naira. But the CBN has taken steps. I mean, they've taken some steps to try and mitigate that. How much of those steps look like capital controls is up for debate, but at least we see that the Naira is closed flat yesterday and the day before, which is surprising because we also know that a few oil companies sold dollars, I think that was yesterday, and to see that the Naira still closed flat, it's kind of brings to question what is going on that side of the market. But give or take, the elections has done its bit. Now we're trading at about 199 now, 18 kobo to the dollar. The BDCs are trading at about 224 to 25 naira. It has created its effects. But one of the things I've noticed about the markets and Nigeria as a whole is that we've just factored everything in. We've just put it in and we're just walking along with it as it goes.
Okay, so let's take a look at some of those things we've listed there on your screen. We're talking about elections and the market. Okay, there you have it. Foreign investors, in the run-up to these elections, we noticed that foreign investors dumped a lot of FGN bonds and we saw yields rise. Was this, of course, this wasn't like good news, particularly for the economy?
You might want to look at why bond yields are rising. First of all, who needs these bonds at the end of the day? It's the federal government, and it's tied to the government using it for its own meeting its own revenue shortages once in a while. And people are thinking to themselves, your cash reserves right now are under 30 billion, and they're thinking, okay, what happens when it comes to time for you to pay me back these bonds? And we've just seen a significant rise in the yield sector of that. But I want to point you to something. If you look at economies across the world, which are similar to Nigeria in terms of the headwinds we're facing, the bond yields are quite similar. So you'd see that the markets, as I said again, the markets have kind of priced it into the whole setup. That's why even on Friday when S&P downgraded Nigeria, our bond yields even eased instead of going in the other direction, which should have been the case, as it happens to be when you hear such bad news from a global ratings agency. So the bond markets, the yields have continued to rise. We might see that persist a bit. Okay. But give or take, it's just mirroring the realities of what is happening with the larger Nigerian economy.
And how has this affected businesses, hedge funds, and currency investors?
Well, it's just, to start with, before the elections and right after the postponement, I had a lot of foreign investors complain about the effects of it. Some people had lost about 50% of their portfolio into Nigeria, and that was a significant bother for many of them. But give or take, markets rise, markets fall. They've made a lot of money they lost some. That's not good to hear, but that is the reality on the ground. So the hedge funds, and really that's why they're called hedge funds. They're able to diversify their investments to such a way that even if they lose in this area, they're still able to make it up in this other area. So give or take, they will survive, but the economy is just showing what is happening on the political side.
For instance, if the MPC had decided to change its stance on rates, do you think that it would have been in the interest of the market, the economy, or investors, and giving most of those foreign portfolio investors a breather, so to speak, or this thought that yes, it is in our best interest to stay in this market?
I really want to speak about, share my thoughts about the MPC meeting. Usually the MPC meeting is always a major issue, and everybody is talking about it. This last one just came and went, and kind of like the entire market knew what was going to be said, and everybody could have written the script for the governor. And it kind of worries you to know that the markets believe that the hard decisions would not be made in the face of elections, and it doesn't really paint a very good picture.
What if they didn't want? What if the committee didn't want to be looked at as being politically inclined to a certain party? Wanted to make sure, because that's what I know the CBN governor has always said, he wants to remain apolitical and ensure that whatever decisions are reached are in the interest of investors and the economy, and do not want to be looked at as being more political.
Well, let's look at the table. The CBN doesn't have a lot of options right now. It's not like it's spoiled for choice of what to do. There are very basic things in front of the CBN, and it doesn't make it any easier for the CBN, because the people who are holding the fiscal side of the economy have left the entire matter up to the CBN, because there is a fiscal side to this problem that we're facing, and they've left it to the CBN to handle the entire issues. So as the CBN, what do they have as in front of them as tools? Tighten in terms of rates. Look at dollar CRR. What else? Devalue the currency.
Liquidity ratio as well.
I mean, there are not very many options. Do you understand? And we're still seeing that the problems have not gone. The problems are still in front of us. So it's either we're going to fix it now or tomorrow. And so a lot of people are saying, why not just go ahead and do it now? But then the thought was, it won't be good before a political an election.
A very crucial one at that.
Exactly. So, as you said, he didn't want to sound apolitical or come across as apolitical, but either ways, he would come across as, because not doing anything is, in itself, could be termed apolitical. So the thought is, why not do what needed to be done? We were hearing a lot of sentiments of people saying there were certain past CBN governors who would have made decisions despite what was happening. And that can be up to debate, but everybody across the world knew that there were certain CBN governors of the past who would do it as it comes to them.
But then again, could it have probably put more pressure on the markets? You notice that in the last 3 days since this week started, surprisingly, we've had a bullish run across most of the markets. So if the CBN had gone ahead and made a decision to change its stance on this rates, we probably would have seen a worse tailspin than we saw in January and even in February.
Okay, let's start with looking at the foreign reserves. Gross foreign reserves right now are under 30 billion, which is some sort of psychological benchmark we've all put for ourselves. I don't know who put it there, but we've all put it there that should be the minimum limit that it should be. But we're falling under that. And it's not showing any significant sign that this is going to get any better. Crude oil prices are not getting any better. America and Iran are still speaking about this trade sanctions. If that is lifted, okay, yes, we know the issues with Yemen yesterday, that helped crude oil prices. But if Iran comes back to the market, we can successfully say that crude oil prices will not get any better in the short to the medium term. So that means we will not be seeing any of those windfalls we saw when crude oil was northward of $100 per barrel. At this point we are, what do we do to fix the economy? What do we do with what is going on in front of us? The CBN reserves, less than 30 billion. Revenue not coming in as strong as it used to be. We do not have too many choices. It's just, I mean, it's just right there in front of us. It's either we go this way or we go that way. I mean, it's not really easy. It's not really easy. I mean, it's easier for me to be on this side and just say it. But to be on his side, I mean, there are a lot of variables he'll be looking at. There'll be a lot of thoughts he'll be looking at. But the markets see these things. And you see, that is what I keep saying to people who are in leadership positions. You come out and you try to protect the market, or you try to protect the economy, you try to protect the people from hearing the truth. But the truth is that these people have analysts, people who follow the trends, and who are telling them this is what is happening. So if you're coming and telling me something different, it's either one, you don't know what the truth is, or you're trying to hide something from me. Which two of them pretend to a problem? So, I mean, foreign investors already know that we have some sort of an issue. It might not be, unique to us alone. But look at the other countries that have those same problems. They're coming out saying, this is the issues, this is what we're doing to fix it. We're doing the bury our heads in the sand kind of thing.
Now, looking at all those people who've come out, from those various countries to talk about, let's look at the various campaigns that we've had, the last couple of weeks after the rescheduling of the elections. Would you say the message has been positive or negative in terms of, for investors, in terms of the treasury bills market, the bond market, the currency market?
I think the entire markets, the markets are fatigued. We're well tired. We just want to move on. Let's just get past this. Come and go elections. Let's just move on. And that's why you see that markets are not responding to the elections. We've seen a 4-day bullish run on the Nigerian Stock Exchange. They're not responding to the elections anymore because we factored that into our political risk portfolio. Everybody is, okay, this is going to be there. It's not going to go anywhere in the short to medium term, so let's just factor it in. So the markets are moving despite what is happening with the elections. So, I mean, that in itself is a problem. That is in itself is a problem when they feel, well, let's just X these people from our considerations. They're going to be funny anyways.
So in other words, most of these investors have like 3 to 5 different scenarios in the eventuality that this happens.
We're going to do this.
But that's not healthy for the markets.
I would say that it's. I wouldn't say that it's not healthy. For one thing, I think we have more mature investors. Looking at the last 4 days, we've had sell-offs, but we've had more people buying than actually selling. And this is a situation where people should actually be selling. But people are now bargain hunting, looking for, because there's that thought that in Q2 the markets will rebound significantly, and people are just trying to position themselves. There's been a lot of dividends being declared. People are just trying to position here and there. That is good for the market. That just tells you some of the investors in the Nigerian space have become more enlightened.
Yes, so that means we're having most of domestic investors in this market and not foreign portfolio investors.
Well, there are some of them who have the large risk appetite. Let's be real. It's about risk. It's how much appetite of the risk you have. So, and that's why I always continue to say that the Nigerian Stock Exchange should continue to look at the Nigerian space. Because, for instance, if the market crashes, where am I going to go to? My money is still here. I'm going to stay here either ways. So, those are the things. We should look more inward and more at Nigerians, people in Alaba who have a lot of disposable income, who do not know anything about the stock exchange, who do not know anything about the bond markets and the rest, people in Aspanda, all those women who have large cash piles who are just sitting on it doing nothing should be able to be spoken to, educated about the markets and brought in. So that, because at the end of the day, when the markets crash, rise, fall, whatever, they're going to be here with you.
That's true. Now talking about, the dollar has been like, that's the most frequently used currency that we use here in Nigeria for transactions. But any ideas why the Naira is advancing against the British pound and the euro? Somebody was telling me yesterday he had to buy the British pound at 328 Naira, to the pound. And it's really funny. Why do we see that kind of pressure on the pound and the euro?
Oh, well, significantly, I think it's more around what we have against the dollar, because, I mean, that's what we're benchmarked against. And the dollar has its own gains against those other currencies which you've spoken about, the pound and the euro. So it's pretty much a market dynamic. It's not really having to do anything with us. It has really nothing to do with us. It's just our relation with the dollar and the dollar's relation with those.
Okay, so Tunji, just before I let you go, on the eve of elections, from everything you've said, it seems as if investors are just generally going their way. Whatever comes, they take it.
That is it. I've been speaking to a few investors across the Nigerian space, and everybody is investing like there's nothing wrong. People are buying like there's nothing wrong. Everybody's just factored in how much risk can I take in this political period, and they've set that in their minds, and they've started moving on and investing as they should.
Tunji Andrews, a pleasure having you on the program this
morning. Pleasure being here.
Thank you so much for sharing your perspectives with us.
Thank you very much.
Tunji Andrews is the Managing Director of SBM Intelligence, joined me on the program to share his thoughts on the elections and the market. Business Morning continues in just a moment. Please join me again.